Hello guys, and welcome to Mindset Hustle. This is your boy Prof, and in today's video we are going to continue with the part 2 of the boom and crash trading series. Okay, now I'm sorry for not releasing this part as soon as possible because I had to concentrate on my private mentorship students. We were having 2 weeks boot camp, and that took my time, so I'm very sorry for the delay in bringing out this part 2 of the boom and crash training series. Without much ado, if you are new to Mindset Hustle, do well to smash the subscribe button and also turn on the bell notification icon. If you will also find this content valuable, leave us a like and don't forget to also comment in the comment section below asking us any question about this particular lesson. Let's dive into today's lesson. So welcome back guys. So in the previous video we talked about market structure, and I demonstrated how market structure look like on the trading platform, okay, using illustrations. Okay, I drew illustrations to show you, but today we are going to look at it on the live chart. Okay, and since this is a boom and crash trading series, okay, I'm going to only work with those pairs. Okay, boom 1000, boom 500, crash 1000, crash 500, crash 300, boom 300. Okay, those are the only pairs you are going to use in this particular series. And if you are not having an account that trades these particular pairs, please do well to click on the link in the description of this video and subscribe with DERIV. Okay, so DERIV are the only broker in the entire world that trades these assets. Okay, so you can only get access to these assets on DERIV broker. Okay, and to create an account with them, please, I'll leave a link in the description of this video. Do well to click on that link and register with them and start trading, so you can practice with demo, and then afterwards you can start live sessions, okay, or live trading. All right guys, so let's get into it. So if you remember, I said in the previous video that when we come to structure, we have what we call main structure and internal structure. Okay, so here I'm only going to mark the main structures, and then after that I'll show you what I mean by internal structure when we were looking at the illustration the previous time. That's why I gave you two different examples. I call one the textbook example, and I call the other one the reality, okay, or how the thing actually looks on the chart. And if you look at this chart, you see that it doesn't match up with the real life the textbook example. All right, so let's get started. Let me see this boom 500. So as you can see, we are here on this session. Okay, let me just highlight this area from here to that section. You can see market is on an uptrend because we are doing series of highs, low, high, low, high. Okay, so let's mark that. Okay, so using market structure already, I know we are on an uptrend. Okay, and so in this case we are assuming this area here does not exist yet, okay, or has not yet occurred. Okay, you look at that, come back to that side. So this particular moment, let's look at this particular session here. Okay, so I'm going to use my trend line over here. I'll click on it because I don't want to use the horizontal line to from here to that, no. So I'll use the trend line. I'll click on it, and I told you that the highest point, okay, is what you mark, which is the wick here. But then when we are talking about break of structure, I told you that we need the candle's body closing above that high, or if it is in a downtrend, that low. So this time we are looking at what? At a high. Okay, we are looking at what? A high. So we need the candle's body closing above it to give us a what? A break of structure. okay, or a break of what market structure, as some people will call it. So this was the high, and this is our low here. Okay, this is our low. This is daily time frame, so we are marking this structure on hot daily time frame. It's always good to look at structure on daily time frame first, see what daily time frame is doing, because if you are a day trader, you should always know what daily time frame is doing. Then after that, you come down to H4 for your daily directional analysis. Okay, all right. Now once this high is broken, and it was broken by this red candle, let me see whether it's a red or the, okay, by this doji, bullish doji here, broke it because the body of that doji, sorry, I said doji, pin bar, that pin bar there do what, broke this high. Are you okay? Broke this high over here. So this high is now confirmed. So not this candle, not this big candle, because this candle only wiped liquidity. Okay, the wick here just wiped this liquidity, so we don't call it a structural break if it occur like that. But this guy closed above this area, so that is a structural break. So after that, what do we see? A new high was created here. Okay, so I'll mark this high as my new high. All right, so until this high is broken, no structure is created. So okay, a structure can only be created, a new structure can only be created when the old structure is broken. All right, and this particular high created this low, not this. So this and this, okay, so, all right, I'll talk about it. So let me just move on for now. I'll come back there and talk about that. Okay, now if you really want to really take your trading to the next level, do well to join the Captain's Mastery course. Okay, on our mastery course, we give you all the in-depth knowledge that you need to know about the forex market. Okay, I have a lot of my students who are doing well for themselves trading forex. So please, if you want to know more about our mentorship course, do well. I'll leave my contacts in the description of the video. Do well to contact me on Telegram or by email, and I'll attend to you. All right, let's move on. So after this high was breached, what do we see? We created a high here. Okay, I will give you some differences in these things, why I call this a high. Okay, so we created a new high here, and that high created this low, and we'll talk about that later. Okay, so it created this low, and what do we see? This low caused the breach of this high to create a new high here. Now after the creation of this high, price pulled back. It pulled back, but this high was not breached, so this cannot be considered a low. So our last low that was created before the last high, so this becomes automatically our last high. All right, so this low is responsible for this high. Okay, and it is an equal high, somebody will say. So if you go to the lower time frame, you get kind of like an M formation type of scenario in this region here, where we have this double top formation on the daily time frame. Okay, now as I said in the previous lesson, so if you have not watched the part 1, I will leave a link to the part 1 in the description of this video and also in the card above, so you can click on it and go watch the part 1 so that you understand what we are doing on the chart here. Okay guys, all right, so now let me explain some things before I come down to this area here. Okay, and so here you can see that after this high, this drop between this high and this low, we have what we call internal structure. So I was talking about it in the previous listing. So you can see here, price drop up to here, went up, then breached the low, came down, went up, breached this low before creating the major hot low. So this that happen within here, when you go to the lower time frame like H4, H1 and co, these are major structure on those time frame, okay, which you can trade based on those time frames direction at that particular period in time. So this is why we have this internal structure, okay. So a low, a high, a low, a high, then a low, which gave us the obvious low for this particular short uptrend here. Now let's look at this downtrend, and you can see it's the same thing here. You can see it came down, then up, down, breach, went up, pull down, breached again. So those are all internal. All this is what internal structure, okay. And I demonstrated all those things when I was using the illustration the last time, so you can go check it out for yourself before you come back. You can pause this video, go watch that, and then you continue. If you are getting a value from this video, do well to leave us a like on the video and also share it with others so they can also grab this knowledge. All right, so if you come here, I told you guys that market is very let me say obedient to structure, okay. So in all that you do, always make sure that you trade in the direction of the break in market structure. So if market structure is broken upward, look for a zone that when price pull back towards will go still in the direction of the break in structure, all right, until you see that market has broken structure in the reverse. So that is what happened here. You can see after this last high, our last low that was created there was broken by a candle body close below it, okay. So and this candle body close is a heavy one. You can see this heavy movement, you understand. So what happened, you can see that price has broken this particular low. Once that happened, then you should begin to remember the fact that you are supposed to trade in the direction of the breaking structure. So all you need to do is to look for what caused this break of structure, and you do that on the lower time frame and even on the higher time frame, but then you don't do your entry on the higher time frame, you do your entry on the lower time frame. So you do your analysis on the higher time frame and you do your entries on the lower time frame, okay guys. Let me see if this recording is going on. All right, yeah, so we can proceed. All right, so here after the breach, okay, we were expecting price to do what, to at least maybe you see sometimes price can do what we call deeper retracement, okay, based on maybe weekly zone or a monthly zone, all right. But then if price does not go to breach this last high and price just reject again and break the new low, which is this area here, okay, with the candle body, okay, which occurred using, and that break occurred with what, this red candle here. This red candle is the reason why that structure was broken. Once that happened, this now gives you what, an idea that no, we are now changing from an uptrend to what, a downtrend. Now we formed a low that is what, that is lower than the previous a high that is what, lower than the previous high, instead of it being what, higher than the previous high, for us to what, to move on in our hot uptrend, okay. So let's see, what did price do? Price breached this low, then what do we see? It came and what, created a new low here and pushed price up. So I told you, you mark the obvious structure. And you know, let me tell you guys something, one thing, because this thing happened to me myself also before, so I can tell you. See, we are not patient. We as traders most of the time are not patient with the market, you understand. we are not hot, we are not patient with the market. We always want to be in a trade. Okay, but if you know what you are doing, always wait for price to always come to you. I remember those days when I'm just jumping into trades. It creates fear in me because I know I didn't do proper confirmation. I just jump into the trade anyhow, and I lose a lot of money doing that. Okay, so guys, always mark your chart. Okay, get your analysis right and just relax. Even if it takes 2 days for price to come there, as long as you know that you have done the right thing, just wait for what price to come there, and you can take your trade. Okay guys, so if you like the content, just leave me a like on this video, and also don't forget to share the video. This is Mindset Hustle, and we will continue to bring you quality or quality content. Okay, educative content. And mind you that forex is not the only content we create on this channel. We create content on money making, and also we create content on cryptos. Okay, so you can watch some of our other videos that we release on other topics and make some money for yourself. All right, so here this was the last low that created this high. After it, this high was created, this red candle was responsible for the break of that structure. Okay, please, this is not the main, this guy just only, this is not the one responsible for breaking this particular or this particular low. No, it is not the one responsible. This red candle, this wick, okay, only came to what, to take out what, liquidity. It only came to sweep what, liquidity out over here. All right, so right now what you are going to do is you mark the next low, which is this guy, and that created this high. Okay, so this low or this new structure, call it new structure, is created. This is why I prefer trading view sometimes, but binaries trading view is not serious. It likes fooling. All right, so after that, this is our high that caused the break in this low. Okay, so this high is responsible. Guys, you see the way I took my time to, though this is a free content, I took my time to explain these things to you so that you understand. Okay, there are some other things that I'll not talk about here, otherwise I'll not be fed to my private students, but then I still am giving you almost everything. Okay, so this a big, when it comes to the structure, I'm giving you everything. All right, but when it comes to like other things like entry, maybe that's where you lack some of the things. Okay, because I cannot make those ones. Entry is the most important thing. I cannot make it public here. If you need more information, you can contact us and join our mentorship program. Is at a very cool price. Okay, please do not, a lot of scammers do leave comments, investment comments in the comment section. Please, and please, this is a disclaimer from me, do not fall victim to them. Anybody advertising anything Bitcoin investment, mentioning somebody's name to have been good to him or her, please, it's not me. Anybody using my name, check it well, check the channel's name very well, and look at the fake channel names that are commenting under it, so that you will not fall victim to them. All right, money is hard to come by. So this structure was broken, and we created what, a new low. Okay, it created what, a new low, which is here, the last low. Okay, has not been breached yet, because this particular guy was not this was the last low before this low, but then because a candle body didn't close below it, we use this as our last low. Okay, and is what you need to know is this is also known as this level, this low is also always known as what, liquidity. Price will surely come and wipe it before, we call it the money area. Okay, liquidity is just an area, so liquidity is just like a fuel that moves the market. Okay, So price always takes out liquidity before it goes. So after this we have our high, our new high here. All right, so if this new high here, okay, for us to know that we are still continuing with our downtrend on the daily time frame, then we wait for this low here to be wiped. Okay, but that doesn't mean you will not be trading. All you know is, as it stands now, the boom 500 is in what, is in a downtrend. Okay, and as I said, most of the other movements here are all internal internal structures. So this one, always what you need to do is to first look out for your daily structure. After I've gotten your daily structure, so for instance, this is our last daily structural area, this low and this high. So now you come back and you work within this range. Okay, you work within this range. Okay, you work within this range, this particular last daily structural range that has not yet been broken. Okay, so you go to H4 and see what type of structure is forming within this range. Okay, so you can, let's quickly just go to H4 and let's see. So in H4, this is what we are seeing in that area. So let me use my horizontal line to just place it here, like, and delete off this guy. So we call this area the previous day low, previous day high, but this one here is not yesterday's high. Last two sorry, I say day, week. I'm talking about week. Okay, this last 2 weeks of low and this last week's of high. Okay, but last week's low is here. I'm not teaching about liquidity today, so I don't want to confuse you guys by going into details on that. Maybe in another video we'll talk about liquidity. All right, so here on H4 we can see price is what, is also, okay, over here we can see price is making what, low, high, then this low was taken out by this guy to create this what, this new low, and then a high was what, was created, and then we breached this low again and we created another what, another low here, which push up to create this what, this high over here. We put our what, our low over here, which has been breached. So right now H4 is what, is telling us that we are still in what, in a downtrend. But mind you, one thing you need to understand, if you go to the daily time frame, okay, if you come to the daily time frame, we are around what we call a daily time frame demand. Okay, a daily time frame what, demand. All right, so price has already what, mitigated that area. Now you can go onto the lower time frame, because this area has already been mitigated. There are some entry confirmations that you can use, like the change of character and all those stuffs. Change of character, you can use change of character, you can use flip, okay, methodology to what, to enter on the high on the lower time frame, like M15 and co. Okay, so I'm not talking about that now or in this video, so let's just move on. All right, so here, because we are in a higher time frame demand, okay, always the higher time frame zones kind of command the trend. Okay, right now we are in a higher time frame demand. Okay, so if you want to know much about our demand and supply trading, as I said, you can join our mastery course. Okay, and also we have an H4 supply here. Now if this supply intense is respected and we didn't break through this, then we can still trade a sell on what, boom what, 500. But looking at this area of what, demand, which has another daily demand within it. Okay, we have another daily demand here within it, which price is already, yeah, I'll use this week, okay, which is also a 4-hour demand area. That week is a 4-hour demand area. There is a reason I use this, and I think my students will understand why I'm using the week here as the demand and not the whole body of the candle. Okay, all right. So now that we are also tapped into what an H4 hot demand zone, you should know that a zone within a zone, okay, if a zone is found within a zone, that zone is what is very strong to push price. So the probability of price breaking through this is high. The probability that we will have a spike going through these zones, okay, breaking supply and creating demands along till we got to this previous high that was created is high. Okay, now to know about all those things, you need to follow and you need to do your structural mark time frame by time frame. Okay, so the four major time frames I use, the three major time frames I use to do the markups are the daily, the H4 and the M15. Then I use M5 to make entry, M1 to make entry, but those ones, M1 for instance, I use it on VIX and currencies. M1, M2, M3, I use them on VIX and currency, but for boom and crash, I use either M15 or M5 or M10 to do my entry. Then I analyze them on what D1, H4, sometimes H1. Okay, so that's what you need to know. So here you can also mark out the H4 structural levels, okay, using the same method that I taught you. I don't want to make this video very long, so this is the part 2. I'll see you in the part 3. Okay, I'll see you in the part 3 of this series. So until we meet, if you are new to the channel, subscribe, like this video, press the bell notification icon, and also share the video with your friends so that they can also acquire this knowledge. Don't be greedy, don't keep it to yourself alone. Till we meet again, it's Prof. I'm out.